Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Thick,
I've bidden a penny. I will buy the stock for a penny.
with everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Thick. If we're a little quiet this morning for whatever reason, just let us know in the chat. Running the show from Joel's computer, but otherwise we should be all good to go. We got a busy show for you folks today. We're going to be joined by Rachel Shasha at 8:35. She is an options trader. Her site is sassyoptions.com, but we have a lot of news to discuss. It is retailer earnings week. We have a lot of ratings. We have Alibaba. They had Singles Day. It was great, but not good enough, apparently. And we're going to talk about PCG here, continuing to get the beats in light of the current wildfires out in California. That said, Joel, why don't you give us a real quick setup on the S&P 500s here?
All right, we had a real nice overnight range, pre-market high, 27.95 and a quarter. That matches the high, the intraday high from Friday. That's a big level. We're traded down 375 at 27.75.50. Pre-market low, that comes in at 27.73.75. Let's see. Friday's low, way down at 64.50. That's a big target on the downside. Crude up back over $60, up 57 cents at 60.76. And look at gold right back near 1,200, down a $1.90 at 1206.70. And silver, they really never went anywhere on that rally. That's traded down 2.5 cents at 14.11. Triple D, how are you doing?
This is gonna be a head on a swivel right now. What just happened? I left for 3 minutes to go to the bathroom before the show, and I come back and I bought a pile of stock. Did something just happen at 8 o'clock?
8 o'clock, Spencer.
I left for 3 minutes.
3 minutes.
And we fell 5 handles.
What I don't know. Did anything happen? I don't think so.
Veritas to
Anyways.
buy Athena Health. I don't
Nah,
know.
that's old news.
That's old
old
news,
news.
no?
Yeah.
No. Anyways, we just fell out of bed here, 4 or 5 handles. I had a bunch of market making orders out there. It shows you can't go to the bathroom even before you can't step away from your computer for 2 minutes when you got a couple hundred orders floating there. So
Well, what did you
guys, I'm
say?
with it
What
for
did
2
you
minutes.
say?
I gotta get
Wait,
I'm in damage control here because
Okay.
I went to the bathroom. So this is real trading. We don't play games on this show. This is for real. So I will be back at you guys in like 2 minutes once I get this in check.
okay.
Joel was saying that or someone came over to the news desk. We had something. So what happened, Joel?
No, nothing.
No. Okay.
Luke is doing some squatting.
Oh, squawking. Okay. Got it.
We got a fast market here.
Whoa, yeah. Everything was real calm about 7:56, 7:57, and then all of a sudden, apparently, stuff's hitting the fan. So Dennis will be back with us in a few moments, apparently. In the meantime, let's talk.
First, I want to say,
Yeah,
what did
what?
Dennis say before he got up to take his little bathroom break? Remember when we were talking on the pre-market show? He said,
No, what do
I
you say?
can't understand why all these why the market is hardly is up at all. He was looking underneath the hood,
Yeah.
and he said, "Hey, what's going on here?" And then he comes back and he gets hit on a bunch of stuff. But let's just look at the market. I just want to talk about Friday's action a little bit, okay? And started out okay. Big sell off took us down to 27.64.50. And a number I want to keep, I keep crazy numbers in my head just because I'm crazy about numbers. But that close on Tuesday was 27.59.50, right? And that's or 59 even. And then we had the election results, and we just had that absolutely ridiculous rally on Wednesday. And I didn't get hurt in it, nor did I really participate in it. But to me, that 400 or 500 point rally, I just can't see where it came from. I mean, you got gridlock in Washington now. The election results, I mean, no one really came out on top or on bottom on that. So I think the problems that, we still have higher interest rates, your housing sector, your interest rate sensitive stocks in the gutter. people shifting out of these, high PE stocks into value. So it's just, to me, it's just kind of like a reset here, and keeping a real close eye on 27, 59, 50 or 59 even. That was your close from Tuesday. Didn't quite get there on Friday. 64.50 was your low. Last week's low, if you want to get scared here, is way down at 2712.75. Big R range. Last week's high was 27.18. That was a nice little double top that the market gave us. And Friday's close was 2779.00. But let's first cover these wildfires here. And once again, there's a lot of news coming out of California, Spencer.
I'm actually one of the reasons, or actually the reason that we're running the show today from Joel's PC is that I'll be out Tuesday through Thursday. I'll be out in San Francisco for the Benzinga FinTech Summit, which is not far from where. Actually,
is that going to mess things up for you guys?
No. But I mean, who am I to complain about? There are people who have lost everything. I mean,
exactly.
But all over the state, North California, South California, everywhere. I think I saw a stat that 7 of the top 20, I think, all-time worst fires in the state's history have been in the last month or so. But so there's tons of wildfires. Obviously, if you've been paying attention to the news, you've seen it in the last week. We talked about the last time there was a major wildfire, a month or so ago. PCG got crushed on that, and that's sort of happening here again today. We don't have a cause of this fire, but they still have liabilities from the last fire, and there are 20 as of Friday, at least. I'm sure it's more now, but as of Friday, there were 25,000 PG&E customers without power. Only going to get worse.
Right. So let's just, it's a tragedy that's going on there. We want to try and look at it from a market perspective. And PCG trading down $4 at 35.87. Let's go to our pre-market chart here, and you could just see that they're not asking questions here. And we just came off your pre-market low, and PCG comes in at 35.16. So if you want to see a target there, and then you could just see, the longer term action in this one. And this thing was just recovering here. The wildfires back in June, the stock slowly recovered, got over $49. You can see closed at $39.92. We are now taking out that February low here. So nowhere to hide in the utility, especially this utility. But first and foremost, let's hope that they can contain these fires and take care of the people in the area. Major tragedies. 6,500 houses were lost.
And we have seen there are reports out there, and they're just reports, they're not confirmed, that say that PG&E could be partly to blame for this latest set of fires, or at least some of the fires. No set cause has been identified, but their name is being floated around, so the street clearly has an opinion here.
And in your utilities, let's just look at the XLU. It's not like the utility sector, although it's been hanging in here on the dailies. It's traded down 17 cents today. So maybe some of the other utilities will not be affected as much, at least according to this chart. They've been holding on pretty well despite the rising interest rate environment.
Did this one go up at all with all the volatility we had? The safety and utility.
It did.
It did. Okay.
Yeah, it had a nice rally, and then this is June when you first had the
right.
You had some in December. And then you had some more in June. So just tough stock that's really subject to the headlines here. So let's see what if it can recover today, find some support, and maybe rally back a little bit. But first and foremost, our hearts and minds are out with all the people in California that are losing their lives, their homes, their cars, their businesses.
This is just terrible. Just absolutely terrible. But in any case, let's move on, Joel, here. Let's talk about Alibaba. They had famed Singles Day yesterday. And, Dennis always says they will find a way to justify why the stock is moving. And that's like his one of his most frequent sayings here. So on Singles Day this year, Alibaba did $30.8 billion in sales in a 24-hour period. That is a record number. That's a 27% increase on a year-over-year basis. But if you're looking for a reason to justify the move in the stock, that is the lowest annual increase in the 10-year history of Singles Day, the 27% number. So is that why it's not trading up today? I don't know.
Out of favor. When stocks are out of favor, they're out of favor. The tariffs, what's going on with China has definitely been weighing on Alibaba here. Had that kind of false rally off earnings. I know it got back over 150 in pre-market trading. Never saw that during the regular session. We are trading down $1.42 at 143.43. So also anybody trying to play the bounce there, or the Alibaba, the Singles Day rally, which also was on a Sunday this year. So I don't know what, dynamics worked on for it or against it on that. You have to keep an eye on some daily lows here if you're trading Alibaba. You had a low at 144.23. That was on November 5th. We are trading below that. And I will just give you some other lows in here. 138.62. That was your low on the first. And then you get a steep drop to the low of the move at 130.06. But what I'm waiting for in Alibaba here, and I've been waiting for it for well over a year, and I'm not sure if what this chart will accurately reflect it. They have a gap underneath here. Then let's see, going to the dailies here. See if I could go all the way back here to 2017. Here it is, folks. That's one of the gaps. There was another gap. Let me find it here. Here it is. This is the gap I'm looking for it to fill, and I'm sure Alibaba shareholders are not wanting to see this, but you had a gap up day. This was back in June when they came out and said they were going to do 50% more revenues, and I believe you have a gap all the way down to 123.70, I believe, where that gap comes in. So below the low of the move, there's air in here. I'm looking at to fill the gap. At 130.36 is probably safe today. You're low on June 15th with 133.10, but certainly not getting the boost from Singles Day that they wanted, and just a lot has to do with the environment that these stocks are trading in.
Yeah, and if you're upset that the 27% year-over-year growth was the slowest that it's been, I mean that's how numbers work, though. The bigger the number, the smaller the growth. So I don't know.
Fighting against themselves here, but 200,000 shares have traded down to $1.53 at 143.32. Let's take a look at the stock from Friday's session. The low of Friday's range was 142.48. So you haven't quite reached the low from yesterday for Friday. So keep an eye on 142.48 if it comes into play.
All right, 8:13 here. Joel, let's move over to ratings because we had a lot of ratings today. It is a light earnings day. We do have a bunch of retailers reporting later on this week, so we'll probably preview those later on in the show. But in terms of movers for this morning, ratings will be a catalyst here. And I want to start on that retail theme because L Brands is catching an upgrade this morning from Wells Fargo to outperform, raising their price target to $55.
You're giving me the upgrade now?
Yeah.
This one, I sat through the last earnings report with it. I own this in one of my longer term portfolios, and I think this was a Lisa pick as well. So took some heat on it when it went under $30, but now getting an upgrade here after you had a chance to buy it under $30 for quite a long time. Your pre-market high comes in at 37.73. Not a ton of volume trading here. I'm not, I don't have to chase it because I already own it. But looking at the dailies here, you had a pair of highs right here at the 36.50, 36.60 level. So I'm not going to chase this up here. I'd wait till if I had to buy it or I was looking to do it on a swing trade or something, maybe wait for it to come down and fill the gap from that area. Going on the dailies here. Let's see when the last time you haven't been near $40. The stock traded near $40 in March. I see a couple highs in the middle 38 handle, 38.50, 38.70, 38.80. That's $1.30 away if you're looking for another target. And of course, the psychological $40 level. I think the SPOOs in the market are working against you here a little bit as well. I know I'm a little bit too market sensitive, but with the SPOOs trading down 8, a heavy market, not buying this one, and not selling out of my long-term portfolio either.
Michael Kors, which had the big sell-off obviously last week here, catching an upgrade from, let me pull it up here, from Bernstein to market performance of neutral, but they clearly like the weakness as being bottom.
They do, getting a little boost here, up 67 cents at 48.25. That's not bad. I mean, you're getting a little bounce. Leaning on the low of the move here. You had the low of the move just a few days ago. That came in at 47.47. Closed near the low of the session on Friday, 47.78. With a low of 47.69. You're just getting a little bump here. So they're not exactly, just going out to buy this one. Really getting over $50. You had the drop on earnings day. You came back, you got over $50. So I'd use that as a level, and then a big old gap to fill between 50 and 57. But for this one, I mean, you want to use his upgrade. You want to say, hey, the low of the move is in here. There you go. You're leaning on the low of the move. Trying to, what firm is doing that?
That was Susquehanna.
Trying to
no, Bernstein.
Trying to pick a bottle. I mean, it's not the greatest environment to do it, but after a big decline, I'd rather see this than them downgrading it here. So making a call, and I like it.
Weird candle this morning in Jabo JBL. They're also catching a upgrade here from Goldman Sachs to neutral. Had a weird candle. I don't know. I think it may have been a fat finger here, but it is trading at 25.25.
Down 4 cents. So not getting a big boost here at all. You did get a little pop up to 25.43. I think you get a better picture on this one from the daily charts. From those daily charts tell you there is a big old seller just over $26. It looks like you've had 3 or 4 out of your last highs right above 26. So also this high in October was in that area. So you got to mop up that seller. We're still a buck away from that. So no big upside for JBL until you can take out this seller at the 26 even to 26.25 level.
And then as far as downgrades are concerned, the one that caught my eye, this is just following through on the earnings, but that was Skyworks Solutions, SWKS, Citigroup, downgrading them to neutral here. And despite, the weakness we saw last week, it is still down again.
Well, did you see this? And I don't know if this is the news that maybe no, because it was before Dennis. He got hit right at 8:00. But you have Lumentum, big Apple supplier, cutting Q2 EPS guidance. So I don't know. I think everything is telling you that the top may be in the iPhone market here, and we're gonna have Gene Munster on Thursday, and to talk about this
for like a half hour.
Yeah, for a half hour. So that's, I don't know. It's just something tells me here. You're a big leader here. I mean, for years we've been talking about how Apple has to diversify. They don't do any big acquisitions, and it's just not about the phone. And if iPhone sales are peaking here in a market that's kind of on the skid, you got Apple down 4 sticks. Has a day to 200 here. You did sneak under 200. Low of the move was 198.17. So
it was all that momentum. That's what the news was. That's what drove us down.
Really?
Yeah, 100%, because Apple got annihilated on that. Lumentum is halted right now. So we're waiting for a Lumentum trade, but that came out right at 8:00, right on the button, and they materially cut. So if you're just looking at, they cut the Q2 forecast. Customers materially cut shipments to them. It's just a terrible headline. They reduced guidance $1.15 to $1.34 from $1.37. It's going to get the beats when it comes out of the halt. But the reason why we started selling off too was 755. They halted that stock. So then you probably got a few nervous Nellies saying, why is that halted? And then Apple just started getting hit on it. I took off at 757. We were basically flat on the Qs. We were down like 10 cents. And I went to the bathroom. I came back up and I bought a pile of tech stocks. And I was like, oh boy. And this just goes to show you, it happens every once in a while. But you think you leave for 3 minutes, you're going to be okay. And just something happens in that 3 minutes. You have orders floating out there and you get hit on everything. So, I've been in damage control here for the last 20 minutes here, just trying to get hedged again. I'm finally hedged at worse prices. But when you get picked off, your orders are uninformed. So when you set orders out there, you think the market, it's been fairly stable. I've been trading for 2 hours from 6 o'clock to 8 o'clock. We've been fairly stable. So you think you could take off for 3 minutes. You don't have to cancel all your orders. Can they leave the desk for more than a minute or two? You should always be canceling all your orders. I guess you should always be canceling them, period. But anyways, that was the catalyst here. LITE is going to get the beats when it reopens. It's not going to be pretty. Do you want to do some technical levels, Joel? I would imagine.
Yeah, I will.
Well, I would imagine well under 50, you're going to see this thing.
Do you see the sales guidance cut here?
It's really bad. The
The
numbers are really bad. This is going to really get hit here and this morning when this reopens. I'm not sure when it's going to. Do we have a time there from NASDAQ yet, Spencer?
No.
When LIT is due to reopen? Usually he halted for about a half hour.
No time on that. But the sales guidance, I'm just looking real fast. Some math. Let's say 17%. No, it's more than that. Yeah, 17% reduction in sales guidance.
It's 8:30. It's going to resume quoting at 8:25 in 4 minutes. It's going to resume trading at 8:30. So you can always go NASDAQ halts. It's the best if you want to just go for a place go straight to the source. Just Google NASDAQ halts. It's NASDAQtrader.com. It'll tell you every stock that's currently halted and the resumption times. It's a great site. So that's straight from the exchange there. So yeah, 8:30 LITE will resume.
You had a trio lows near $50. This was back in April. So that is surely on the radar. But the scary thing is here, if that doesn't hold, and who knows, this is really bad news. You got a lot of people caught. You're in a vacuum, and you are not seeing any daily lows. You have a daily low at 46.10. This is from February, and then you have another.
I think that's going to be in play here.
Yeah.
I think you're going to see it down there.
What about 41.95? I mean,
that would be an extreme move. Is it possible? Yep. In this market, you cut guidance. They don't like that. So you go back to 40, the April I see there. You got some support of 40, 41. Now that is an extreme move. I don't know if they're going to hit it that hard. If they do, I would think that might be your first, serious bounce level. But I don't know if it gets that hard, Joel. Maybe. If I was nervous, if I was long this, I'd be nervous as hell right now.
What about the implication? I mean, let's just look at the bigger implications here for.
Well, look at Apple.
Yeah.
I mean, look how much Apple got hit on this. Apple was almost flat when this news came out. It's down $4. So, obviously, this is a direct, showing that maybe, iPhone sales are slowing here, but holy cow. I mean, Apple down $4 on this, that's not even, your LITE is going to get hit really hard.
I mean, the stars are kind of aligning here. They had the report. They're a little light on guidance. They said they're not going to be releasing iPhone sales numbers anymore lately. And I think you're finally seeing today where the bears are going to get the upper hand in Apple here. I mean, the iPhone sales, finally peaking out. I mean, they do have their ecosystem with, their services and everything, but this stock, much of this rally was predicated on, the iPhone, and now they're pulling the rug out underneath it. I think this has bad implications, not only for Apple, the supplier stocks, but I think this had bad implications for the market as well.
Well, that's what the pre-market traders are saying now. Obviously, when you knock 10 handles off the S&Ps, because that's what we've done here now. We're down 90 cents, and we were basically flat when that news came out, at least when the stock got halted at 755. So they've knocked it down. They were hitting the tech stocks. I haven't said to you when we first started, when we started talking about 740, 20 minutes before the show started, I was like, there's a lot of tech carnage out here. I was very surprised the Qs were flat. Well, that's long gone. So anyways, I had some Qs long overnight, and I actually sold most of them up, which was good. That was the good news. The bad news was because I was just trying to do a little bit of arbitrage myself. I obviously had the orders on to buy other stocks a little bit too high. So still, you know, when you leave orders out there, you're going to get hit. So I'm kind of disappointed in myself about that. Went to the bathroom at the exact wrong time. But I mean, you look at Apple, you look at all these tech stocks here this morning, there is a little bit of a tech wreck here happening again. Now, the question is, and, you know, I throw this back to you, Joel, is, you know, you've had this vicious rally off the bottoms, off the low. And we know we got to the low there 2 weeks ago when everybody was washing out and the Qs got down to 160 bucks. Now you've had, you know, in the and over the course of the next week, you had more than a 10% rally going from 160 all the way back up to 176. So call it a 10% rally. It's a significant rally. Now you come off a little bit there. What do you do now? I mean, there's an argument here to be made that the low of the whole move was in, but you're still seeing, you know, Alibaba going down on damn good sales. You're seeing now an Apple supplier cut guidance significantly. You're still seeing problems. So does that mean that the bottom is not in and we potentially could go back down there and, you know, or maybe potentially retest those lows we were at 2 weeks ago? Or do you think there's enough money managers that missed the first time that they'll be looking to scoop up stock on the cheap if we come back down anywhere near those lows?
Well, first of all, I would look at, you know, the retracement here, you know, of this move in the Qs. It's got 160 to 176. So that's a 16-point move, half of that. 168. So you got to really find some support here in the 168 area. I think that rally on Wednesday was not a good rally, Dennis. I mean, they jacked the market. You know, we had come off the bottom, right? And then they jacked the market up 500 points on Wednesday with, you know, Democrats, you know, taking the House. That means it's going to be a little tougher for Trump to get things executed. I mean, Gordon B, you know, making a good point here in the Google chat. I mean, when are tariffs good for a market? When is a trade war good for a market? When is higher interest rates good for the market? I mean, there's a lot of, you know, look at your interest rate sensitive stocks, your housing, which is supposed to be leading the market. I was talking with a buddy of mine about the XHB. I mean, look at that. I mean, yeah, that did get a move off the bottom here, but overall, just a horrible looking thing. So all the concerns that you had before Wednesday, we just got to knock out that rally from Wednesday. Tuesday's close was 27.59. That's what I'm keeping an eye on. We stopped ahead of that on Friday. Friday's low was 27.6450. But you know, the market just needs a reset here. Once again, that rally on Wednesday, that wasn't what the Dr. Bull prescribed for the market. So I think we're going back to test those early November lows.
One good point being made by JB Spec in the chat is, remember when Apple had earnings and the overall tech stocks were trading up that morning on the disappointing Apple numbers, and it didn't affect it here. Could there be the possibility that some of these other tech stocks, which are down right now, could shrug off this, you know, negative, and this is negative Apple news. You know, we can say it's LITE, but it's negative Apple news with Apple trade. Could they shrug it off again or no? And in the long run, they didn't, because the techs eventually did cave, but they tried to shrug it off that morning. Remember, I came in, I was like, I've learned something here, because I would never expect Apple, you know, if Apple's down, trading down 15 handles, that the overall market would be up. And that's what we saw that morning. Can they shrug it off? Is it possible or no?
Nope.
I mean, I think it's possible.
Yep. You know, trading range here. And, you know, I would look for your stocks if you really are looking, you feel like, I know you put a lot of cash, you know, on the side ahead of that rally and you didn't redeploy it. I think
and you've got people like me, like that, are looking at it and saying, maybe I should, you know, start to redeploy some of that cash, because, and, you know, and this is my long-term invest portfolio, not my day trading portfolio, which I'm often hedged in, and I'm hedged here again now after I took 20 minutes off the show. But, you know, originally here we sold off, and if you go to the SPY, you can see when I took the opportunity to raise cash, because I was nervous. We got down to October 11th. We sold off significantly, about 20 handles there in 3 trading sessions. Then we had that wicked rally back up to 280 on the SPY. That was when I took off a lot of positions. I sold some of my long-term MasterCard. I sold some Merck. I sold a bunch of tech stocks that I had. I sold a lot of stock, and I was looking really smart the next week when we ended up tanking another 20, you know, or 200 S&P points down to the 260 low. I was feeling pretty good about myself. Even though my invest portfolio was going down, I had raised almost 10% cash more than I had before, and I was feeling pretty good. In the last week, I'm actually feeling pretty bad. Despite my invest portfolio going up, I'm like, man, I messed up, and I didn't redeploy any of that cash. So now I think on the pullbacks here, I kind of want to redeploy some of that. So, I'm torn. I'm very torn here. I'm like, the original things I was worried about are still on the table, but we had such a vicious rally there at the end of October and early November that it makes me think I don't want to have this much cash.
Light just resumed.
Okay, all right. LIT, Spencer here on the hop. LIT resumes.
There you go, Joel. Through your level, 35 bucks.
Oh, 36 and a. Oh my gosh!
Can't lower guidance in this market. That's that. 35. I saw 35 tick. Is that right? 35 below there?
Yes.
Okay, that maybe was overdone. So that's 38 bid already here, but it's 38 to 44 right now, guys. 6 point wide, 7 points wide, 37 to 44. I think that maybe, but they kill stuff in this market. You can't lower guidance in this market. They have no forgiveness. I didn't think it was going to take out that 40 low. 35 bucks. Wow. We knew it was going to be ugly. 33%. It's down 33%.
Man, oh man, oh man! And just think if if you had a short there, right, and you put out, oh man, I'm listening to these guys in the pre-market show. I'm gonna put a 41 bid in there, and
got probably failed. Where did it reopen? At 35?
At 35. Yeah, and it's shaking.
It's 35 there again right now. It's 35 to 43 right now. That's the market. It's 8 points wide. Now it just ticked 39.82. It's just ticked up 4 points on an odd lot because it's that wide. Now it's 37 to 38. It's starting to close a little bit. It was 8 points wide there for about 10 seconds. 8 points wide.
Oh man. I mean, if I was short, I mean, I'd be on that bid.
But we're scalpers.
Yeah, but I mean, this is a historic move here. Let's go to the monthlies.
Has it ever moved that big?
I don't
Down
think so.
30% a day?
34.15. That was your low in January of 2017. I call right now, I'd call 34 to 36 kind of a buy zone. You had a 34.16 low in January of 2017, and the previous month's low was 36.90. So
here we go. The worst day that I can find. Oh wait, that would be today. Okay. So okay, so before today.
40 bid now, by the way. It just went 40 bid and now it's 37 and a quarter again. Okay. All in the same second, 1 second apart. This thing's wild.
So before today,
thin and wild.
October 31st, 2016, it dropped 10%. That was the worst day in its history before today.
Spencer, you want to tell everyone what you're.
So its worst day was a drop of 10%. We're getting a 33% drop today.
Yeah, right. No, so
sorry, that's crazy.
The way I got this number, this is an internal tool that is soon to be external, but for the moment it's not. A tool that was built here at Benzinga, where you can basically look up good and bad, a stock's daily or weekly performance over the course of its entire history just by searching the ticker, and then it pulls up the best and worst days, and you can just I'm not explaining it well, but it's a cool little tool that'll be public soon. But anyway, the momentum, its worst days were 10, 9, 9%. Best day was 21%. So yeah, it's getting just destroyed here.
Yep.
All right. Griffin, good point. Let's go to the other Apple suppliers and take a look because they're all getting the beats. Let's go QRVO. This one's down 4.6%. It's getting hit pretty hard here in the pre-market. It was already an ugly chart coming in and an ugly downtrend. That trend is going to continue. I don't think I want any part of buying any of these things here right now. This one's down 33%. Obviously, it's the one with the bad news, but this one down 4%. It almost kind of doesn't feel like enough. Feels like it should be down more, don't you think, Joel?
I mean, if you're going off the momentum, I mean, of course you have to. Let's go look at the daily chart in these two. Boom. That was horrible. Boy, this thing got the pop.
It was ugly going in.
Yeah, it was ugly going in.
It's going to be uglier today.
And Apple, I mean, I'm still keeping an eye. Apple got to I think it was 198.61. Or no, 198.17. That's the bogey there. That was the low on, I believe, on earnings day. And then I showed everyone this gap here. And I think, I don't know about today, but I think you get a chance to see Apple in the lower 190s, Dennis. Fill the gap from its last earnings report would take it down to 192.14. So that's a longer term target here in Apple.
Let's go other Apple suppliers, SWKS. Just before, was that where you were going? Was more?
Yeah, I was going to do one more before we go to our guest. But yeah, so
let's go SWKS quickly.
Okay.
Skyworks. That's down 3.5% here as well.
Nothing.
Again, another one that was ugly going in. All these things were ugly going in, and they're uglier today.
Yeah, this one, I mean, comparatively speaking, is holding up pretty well here. 74 even. Let's go to the 15-minute chart here, and that's just trading at the lows here. Is it offered there, Dennis? Someone got the hammer on this thing? I mean, this is...
Yeah, it's offered 74. Nobody's moving. That's I think it's going lower than that probably. But at 74, the only thing LIT is bouncing a little bit here. Now we're $41, $42. So we have bounced, 7 points from those lows, but as I speak, and then it goes down another $1. It's wild right now. SWKS is down $2.50 though. I kind of don't feel like that's enough either. But these were beat up already going in. So, obviously it's probably, some people who are, how bad can the carnage get? I mean, things can get pretty ugly, but I think all other things being equal, I would have thought lower too.
All right, let's take a break here and let's bring in Rachel Shasha. She's an options trader at sassyoptions.com. We're going to bring her in and talk about some options trading. We'll be right back with Rachel. Welcome back, traders and investors, to Benzinga's pre-market prep. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we are on the line with Rachel Shasha. She's an options trader. She runs sassyoptions.com. Rachel, we haven't spoken to you in a while. How you doing here on this Monday morning?
I am good. I disappeared for a while, maybe from the radio show, because I had a baby.
You did. Congratulations. Baby boy, baby girl?
Baby boy.
And what did you name him?
Noah.
Noah. I like that name. All right. Well, congratulations. And I hope motherhood is treating you well. You're probably looking at some little different products in the markets and buying different things. But I guess one stock that Children's Place, right? Wasn't that a stock that we talked?
Which is funny because here now I have to buy clothes.
And are you going?
Hey, we talked about that with her. Wasn't that your play? That was your idea, right?
Yes.
Yeah. Okay.
Yes.
I do remember that.
That, which is funny because I didn't have a child, but I still think, I don't know, I still am short it. I'm a little underwater on it, but I just for the most part I'm break even on it. I still think it's going to go down. I don't understand how it keeps going up. I don't know, but it's not even a chart play. Although if you look at the chart, it's nice to see a flattening 200-day moving average. But that's not even why I did it. I just am like, how is this possibly going to stay? With all these like cheap China like clothes you could buy.
And they sell more than clothes, right? They sell children's accessories and things like that.
Yeah. But it's, I think, predominantly clothes.
So how do you avoid? I know we had you on a little while ago, and I know I get opinions on stocks, and I kind of trade that opinion. This stock has had a significant rally. How do you kind of keep the powder dry, avoid the losses?
Like when it went to 161.
Yeah.
Honestly, I'm like a stubborn short sometimes, maybe to my own deficit, but although they always seem to work out in the end. I was like very short LinkedIn one day, it kept going against me, and then one day it just like wiped out 100 in like a day with that one earnings thing. And it was just like, okay, see? And then CMG, I was short for like a whole long time, just kept going against me, and then just bam, like lost like over half its value. So I don't know, I just stubbornly stay. I don't pick a lot of shorts. I pick like a few that I really feel like adamant about. One that really got me, I was short Ulta in here, I'm like a woman. I'm like, I don't see this happening. I was like, I see there's all this makeup, but eventually people just want to buy it on Amazon or whatever. And all these millennials, they're not into makeup as much. So that was my theory on Ulta. And I don't know, I stopped myself out of it, and then it just like tanked. And I was like, oh.
Is it?
So I just hold on now. Now I'm just like, hold on for dear life.
But you do it with options trades. Like either do you do it with the option spreads or so? Like if you go into a put or something,
yeah.
I mean, that. I mean, if you sell, are you doing more like buying the put or because selling the
with
call?
Because they're long term and not I'm not trying to do it like overnight. I will either do like a really long dated put, or I will just short the stock and then just sell calls against it.
Okay. All right.
Like every other week to send calls against it or whatever.
Okay. All right. We haven't talked to, it was a while back, and the complexion of the market definitely changed in October. I know you trade stocks from both sides, from the long and the short side. How did you approach the October sell-off, and I guess we can ask you like how you viewing this quick rebound?
Well, I mean, my approach has actually changed pretty much since this whole new volatility regime in the last couple of months. Instead of like, I'm a very short-term trader as it is, but now I've become even more short-term, it seems, just because, these bounces, they can like crush you in a second, or just, it's very hard with options to like time it perfectly. So, instead of just like holding on for like days or whatever, I will just, sometimes I'm doing just like a day trade, like I'll just get in, get out, and just be thankful, I made a little money on it. I don't know. For now, I think if I had to guess, and I mean, this is just guessing because I don't know, I would say the low is in, but I don't think that we're just going to go straight up from here. So I think there's going to be a little bit of more back and forth within the range we're in for a little bit. And then I don't know if we're going to we might get to Santa Claus Valley. I don't know if we're going to see new highs before the end of the year. Like pretty much like up until this new like volatility, I would always be like, yeah, we're going to see new highs. We're going to see new highs. And I do think we will see new highs again. I just don't know if it'll be this year. Could be, but I'm not sure we're going to get the Santa Rally everyone wants this year.
Yeah, it's a tough environment here. I mean, we had the volatility at the beginning of the year. It sold off, and then we were able to come back. But we've been in I don't know, I guess it's just a pretty wide trading range here. I want to get your thoughts here on Apple. I'm not sure if you're in front of your screen or not, but one of a company that makes components for the iPhone, LIT, came out, was just a disaster.
Really bad earnings, right?
Yeah. I mean, here's a stock that's, I'm just going to go to Apple here. It's been in favor for, quite a long time here. They didn't like the report, trying to rebound here. Could you give us perhaps short-term and a long-term outlook?
Yeah. And let me just preface this with how it's almost rubbing it in now for me talking about it, because I was short on Friday, and I just, before the end of the day, I had options for this week puts, and I was like, I had just straight puts, and I was like, oh, I don't want to hold it over the weekend. I just don't know. Now, of course, I'm like, oh, why didn't I hold it? But I think that it still has lower to go. There is the 200-day moving average around like 197. I just don't think it's done. I think that if it can get this week, I'm not talking about like forever, because who knows, as the chart changes. If it can get, over 215 this week, I think it's probably done going down. But I don't know. I feel like 215 would be a great short. So, and right now it doesn't look like it's anywhere near there. So, but you never know in this market.
So you think it needs to get back above 215 in order to be back recovered,
to get some more momentum?
Yeah.
But that's like this next couple of weeks. That could change, like based on where it goes from here. But I think, starts getting up there, it's also probably a great short. So
yeah,
I don't think it's done.
Do you pay much attention to gaps here? Because I was hoping.
Yeah, there is a nice gap around 189, right?
Yeah,
like 192 or one. Yeah,
last earning, 192. But I was kind of hoping that we would.
I would say that's a magnet at some point.
Yeah, I do too. I'm not sure about today or whatever, but I was hoping it was
right.
Going to get a little pop up off the earnings and
Me too.
and get up, and fill that gap from earnings. Do you ever do you cover, like cover half of a position? Like I know you had the Apple position on, and sometimes when I'm like,
yeah, I do.
yeah, okay,
I do. I sometimes like if I'm making some of it, I'll just take some off and keep some. But the thing is, I was basically break even by the end of the day Friday, and so it was like now I just felt like I was gambling it.
right. Do you have like a are you a little bit more wary like on the weekends and the Fridays, maybe expecting some volatility wildfires or something that you never can really predict? Does that affect in your trading?
I think it's just that lately the options have been really hard with the premium. It's like if Apple had opened up, instead today at like 208, so much premium would have came out of my puts, and it makes it so much harder. I mean, I think that like so many people or not so many people, but a lot of like people are just like, oh, this is a great environment because so much volatility. But you know what? Like you have to be on the right side of that volatility, and you're doing options. You have to have good pricing. You can't just jump into something, even if it goes down. It might go against you anyway if you're in an option.
With the I know exactly what you're talking about. I did. Well, my first question I want to ask you: do you try and go like a week out? Like if you want to like take a position in Alibaba today, will you automatically default to next week's, or like on Monday and Tuesday, you will try and play this week?
I would probably try and play this week. And then maybe if it was the end of the week, I would, even if I knew I might close it before the end of the week, I might go into the following week just because of the options premium. But I mean, if you notice, like I've definitely, traded a little bit less during this volatility. I've actually traded fine. Like, I mean, they're not like huge winners, but I'm having like slow winners here and there and just stopping out sooner and just not trading as much because I feel like it's really hard, like to just jump into a few different things because the direction can change in a second on you. So I feel like it's to my own benefit, my members, to just keep it slower. Yep. Be a little more patient, be particular with your entry because, the buying the dip is not necessarily going to save you every time, especially not right now. So yeah, I would, if it was like Monday and Tuesday is hard because those premiums are tough, especially on a down day. But if I was going to get like Bala this week, yeah, I would play this week for the beginning of the week and maybe got to like Thursday, maybe I would go for next week.
Yeah, I mean, I'm just lamenting because on Thursday, I believe I tried, I was getting a little bearish. I thought I was going to try and lean on the double top that we had in the S&Ps at 28.18. And I made a mistake. Yeah. I went into, on Thursdays, I went in to the options that expire on Friday. And,
Friday morning?
Friday after the close. And okay. I was up, I was down, I was up. I was like, holy mackerel. And I ate it on the close on Thursday just because it, and I'm like, okay, I'm going to redeploy. Whereas if I would have worked, if I would have went out to the next week and I given myself 6 days, then, the juice would have stayed in there a little bit.
Fridays are tough because there's so much manipulation in my opinion. Like, look at GX, like how it held, and then just bam, at the end of the day, just flushes. Like that to me is like something's going on over there. Like someone is saving the options, and it just if you have an option that expires, you can get screwed that way.
Yeah, I see what you're doing. If I know you last few times you mentioned it, you hadn't been seeing much in your Goldman Sachs options indicator. Is that one you've had put to the wayside for a little bit, or you've been seeing some?
Yeah, it's still now. I just think the banks are just they're not good. They're not as informative as they used to be. They're just not great trading stocks right now. I don't know if they'll ever see new highs like they did. I don't think they'll ever be like leaders like they used to be. I think it's just the market. It's different. It's a different environment.
Not going up in a rising interest rate environment too. I mean, what more could you ask for?
Right. Right. Exactly. I mean,
if you got involved in the, I'll let you go here in a minute. Maybe you have a little feeding to do or take care of the baby. But I just want to ask you, did you get involved in these crazy price action in the marijuana stocks?
Oh, like TLR,
yeah.
Stuff. No, I didn't know. I mean, like that whole thing with like whatever it's called, TL, or I don't remember. Tilray or something. Like whatever that whole squeeze, I don't think it's going to happen again. I think that was a one-time thing. Now I think it's still going to be volatile because it's heavily shorted and whatnot, but I don't think you'll see a squeeze like that again where it went to 300. I think like anyone trying to like pay up like really out of the money calls like that, expecting like another one of those days. I don't think so. I would be shocked if I saw that again.
Overhead supply, right? Like all these people that bought it between 160 and they saw it over 300. They're like cha-ching. So all right, well,
right, and then just bam.
Thoughts? I mean, you already said you don't think we're going to see new highs by the end of the year. Any other tips for traders as far as playing things in Santa Claus rally or Black Friday or anything? Any tips you have for our traders?
I mean, I wish I had something, but if you're a short-term trader, I'd just say when it starts to go like it did last week, just jump into like a couple of momentum stuff, take it as far as you can, but take some money quick. Because I don't know. I mean, I don't know when we're going to get like another one of those V bottoms where it just keeps going and trending and trending and trending. Like, so hard to predict that, I mean, I wish we could, but it's just like I'm just looking for those days when it's going to like, kind of like it did like last Wednesday or whatever day it was that it just flew up. Just ride it along, for like a minute or two, and then just get out and like be happy with your winnings and don't worry that it went a little bit higher.
We've been on the line with Rachel Shasha. She's an options trader at sassyoptions.com and a new mother. Congratulations. Next time we're going to have to get you on. We're going to have to get you on the video and we're going to have to see Noah.
All right. I know.
All right.
We'll help him do that. He's a cutie.
All right. Thanks, Rachel. All right.
Thank you.
All right, S&P futures down 575 at 2773.25. Dennis, you finding some stabilization out there?
Yeah, it has actually, and you know what? They're shrugging it off to a certain extent because we are bouncing here. S&Ps are only down about 7 handles here now. I'm looking at the SPY down 70 cents. I'm assuming S&Ps are down about 7 handles. We know I'm too cheap to pay for the mini quotes because they want to charge me $500 a month. That's because I'm a pro. So anyways, I complain about that at least once a month. I'll continue to complain about it until they bring down those fees. But let's go and look here at imbalances for a second. General Electric, 1.1 million to sell here again this morning. Absolutely killed on Friday. You know what? And I got shaken out of this when I talked about it on the show. And I shorted the open, which was right around 880. And it went down a little bit, and then it started coming back up through the open. I hate it when they come back up through the open because sometimes that means, they're going to take it the other way. And it went up to 895. I actually, as soon as it came back up through the open, I didn't like the trade already. So I was already wiggling out. So I just lost just like 3-4 cents on it. And it went up to 895, but then they turned around. And when they took it back down through the open, I guess that's when I should have struck. And that's when I probably should have put it back on. Anyways, it was straight down there for the next 2 hours, and I was kind of throwing up in my mouth a little bit because I had a nice size position short, and I got shaken out of it. And I, obviously, would have held it. It would have been good. It's down here again today. I mean, this stock just cannot catch a break, and I just don't see what is going to be the catalyst to drive it higher. Because every time it seems like a rating comes out, it's a catch-up rating where somebody's lowering the price target or getting worse on it. They've now changed the CEO. They've cut the dividend. What's the catalyst to really turn the ship around? I don't see it. And that's why, you know what, when I see the JP Morgan $6 price targets or inch $5 price targets, I think, why not? Why can't it go there?
Selling assets is the catalyst. That's all they got left.
That's all they got left. And that's not a good, is that really, what you want to see? Okay, let's sell off all our good stuff and raise whatever cash. That's like in fire sale pricing. Everybody knows they're hurting. Yeah, so this is like liquidation world here now, GE. I mean, I don't like investing in those types of companies here. So again, I've been bearish this obviously since I sold. Like I said before, I had this stock in my portfolio for 17 years. I finally got rid of some of it at 17, the rest at 14, and I'm glad I did it. I ate the loss, and it's at $8 here now, and I just don't see it turning around.
You don't think that you had some capitulation? How many times have we said
a little bit? Maybe some short-term capitulation. Maybe if you want it for a trade, you trade off that 815 low. Maybe we get a double bottom or something there, or test that level again. Maybe for a day trade. But I just think the long-term trend, holy cow, man, it is just ugly.
Yeah,
it's a horrible story. We've beat up on them a lot here on this show for the last year, but I mean, what the hell did they do wrong? I just look at this and I just shake my head because, here's one of the, you go back to the year 2000. I can remember, let's go back to like the year 1999. I was in the University of Windsor, and I can remember my professor, we had like the CEO course, and they're teaching you, how to run companies. And Jack Welch was like the man. Like he was like, the one, back then that every other CEO wanted to be. And, in 1999, GE was, 60, one of the, if not the largest market
Yeah, I
cap
think it was
company,
number one.
right near the top. And I mean, what happened in 20 years? What happened? Was Jack Welch that good, or was it smoke and mirrors and then he was just setting them up for failure? Like what happened?
Well, you buy up everything in sight. You don't question what lies beneath. If you keep on buying, it's all good. So why did GE own?
You think they just bought too much stuff? They got too much away from what they were originally, and they got too big. They couldn't handle it.
Why do they own NBC? Like that made no sense.
Why do they own everything?
Why do they?
They try to buy everything. I
Why
mean,
do
if
they
you're
own
trying
what
to
they own?
grasp growth, you're trying to continue to grow, and sometimes it's at all costs. Obviously, then they get some debt and problems. I mean, it's just a mess.
We got a request here for Tyson Chicken, TSN, and I thought I saw them on earnings coming up. Let me take a quick look here.
They're usually in retail earnings season, aren't they?
Yeah, their earnings should be this week.
No, it's not till the third. Yeah, tomorrow.
Yep.
Tomorrow. Wow, we're flying here. Whew. Well, you got support in here, right? You got multiple lows under $60. Pair of lows at 59 and change. That 59 was a big area there. I mean, this thing has held up pretty well. I'm looking at a monthly chart. Let me tune in a daily. I guess compared to some of these other food stocks, you've come off 20 or so points, but if you look at like a Kellogg or whatever, yeah, I guess they're okay. I mean, they're always safety. I mean, as they say on those eat more chicken. I don't know. Tight range here going into the report here, Dennis. Food stocks a little bit out of favor.
I mean, they've been out of favor for a long time. And you think about the environment that we've had. We've been, in the last month getting rocked in stocks. Really, when you put it into perspective, yes, we rallied the last week and a half, but it has not been a good environment really for the last month and a half or 2 months in stocks. So typically they will flee to safety. And they have, XLU has had a great month, if you look at it. And, a lot of other stocks like Procter & Gamble have had a great month. It's been straight up PG, from 82 to 92. But then you start looking at the food stocks and you start thinking, what are they doing wrong? I mean, Kraft Heinz, a disappointing earnings, is trying to claw its way back from there, but it really hasn't rebounded. Yeah, Campbell's is trying to break out on Friday, finally showing a little bit of life, but really hasn't had the rebound that the other things have. Yes, General Mills has come back from the lows that it was a couple weeks ago there, but really, when you put it in perspective, these things have not rallied what they're supposed to do. They're supposed to go up when the market's going down. Yeah, they have done it to a certain extent, but they were so in the hole that it doesn't even looks like a blip. I mean, when you look at that KHC chart and you think, man, this is supposed to play defense, look at it over the course of the last 2 months, it's really gone nowhere. It hasn't gone up in a crappy market. So why is it going to continue to go up? Tyson Foods, a little less dividend. Maybe it's defense. Maybe the stuff eventually starts to catch a bid if we really start to roll over in the market, but it really hasn't happened yet. It's shown some life, but not enough.
All right. Oh boy. Let's see here. The PCG is just that's continuing lower here. Bad day on Friday.
Well, it's going to be away on the XLU here today, so obviously keep that in mind. Because automatically you think, okay, TLT is trading higher. We got a risk-off day here. XLU is going to be higher. Be careful. Let's go look under the hood in the XLU because I want to know how much PCG they have. When you get one component down 15%, it weighs on the entire index if it's any weighting at all in there. So if we go to PCG in the XLU, it is 3%. So you can do the quick math: 3% times PCG, which is 15% move down. So what is that? About 3. Joel, air math, help me out here. 3% on 15. So if it's 1%, if it's 1%,
half a percent,
about a 0.5%. That's about right. So it's about just itself is a 0.5%. So XLU is down 0.5% right now. That is all PCG. That's how the other utility is going to open flat. So just keep that in mind when you're doing these things.
Top holding.
When you're trading, you got to be aware that XLU should be down 0.5% just to compensate for PCG.
Top holdings are Nextera, Duke, and Southern Company. So
yeah, and if you look under the hood, none of those are trading higher here today. You could have a sympathy move here too. Maybe some people get nervous on some other utilities there. So be cautious just jumping in the XLU here today. On other things being equal, other days, this is the kind of day I would want to own XLU, but I don't want to own it because of PCG today.
All right, Dennis. Also, keep in mind here it's Veterans Day here in the United States, honoring our veterans. And I think the bond markets close early, so a little bit different. I think the bond market, I think, might even be closed. Banks and bonds are not trading here, so keep that in mind. A little change in liquidity, perhaps. Going out here, I'll just recap the S&Ps. We had a big old range overnight, 27.6850. Of that, your pre-market low. That is not as significant to me as your low from Friday, 27.6450. Coming back on the upside. Let's see if we can get green on the session. We went out Friday, had a nice rally off the lows, went off at 27.79. So those are some levels we'll be keeping an eye on. I think that pre-market high is pretty safe for now. That's 27.95 in a quarter. Okay, Mr. Spencer, you want to tell us what you're going to be doing on Tuesday?
Yeah,
Wednesday,
yep. I'll be
Thursday?
out on the West Coast in San Francisco for the next 3 days for the Benzinga FinTech Summit. But Joel and Dennis will still be here with you to guide you through the mornings. There's no Joel asked if I wanted to do the show. I said there's no way I'm doing a show at 5 a.m. West Coast time. I'm not like Nick Shaheen, but Nick Shaheen will be on with you tomorrow, as he is every Tuesday. He's our Tuesday guest. Want a quick thanks to give a quick thanks to Rachel Shasha for joining us today. She was great. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. Please remember that all the information from our show is for informational purposes only. It's not meant to be investing advice. And as I look to my left right now, I see that Larry Culp is coming up next on CNBC. So a good time to hear from the new CEO of GE. And on that note, I hope everyone has a good day. Hope you had a good weekend. And we'll see you on Tuesday.